Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on today's show?
Well, Jim, we're going to talk about my plans for the bottom fishing season and next year, and talk about two bottom fish that are examples of how I am thinking about these resource juniors that I think will flourish in 2025.
What are your thoughts about the year-end bottom fishing season?
Well, Jim, I have been mulling whether to even continue running Kaiser Research as a research platform covering all the Canadian and Australian listed resource juniors. We've been in a bear market since 2011. It's been interrupted a few times by short-lived rallies, but the result has been a general shrinkage of the traditional audience for resource junior speculation, in particular the boomers who are not that much into it, and there has been a failure of younger generations to embrace resource junior speculation. So it's been pretty tough to sell a newsletter that isn't who's focused on picking stocks that end up being bottom fish for most of the year. Now, I've been contemplating turning this into a platform just for do-it-yourselfers, charge them $200 a month. They're not going to be interested in any of my stock picks or comments. They're just going to use the search engine to find companies that meet their private criteria, basically save them an awful lot of time. And so this would be a corporate and high net worth type subscribers who can easily afford the $200 a month, and they're not interested in bottom fish picks. Now, the part that I enjoy the most about Kaiser Research is the bottom fish workshop. I love going through the companies, using my search engine, finding them, reconstructing the history, finding out what they're trying to do, getting at the particular story. Now, there's a lot of AI activity being done today, which will summarize the timeline of these companies and sort of tell you all what they're doing now. But they don't really extract the hook, the story that gets one interested and caring about a junior's future. And so I've decided that I'm bullish on a turnaround in this bear market. I think that the geopolitics of the world, if we have a Trump victory, the marginalization of the United States accelerates, but the marginalization of the United States and its U.S. dollar as the world's reserve currency, that will also continue even if there is a Harris victory. So I see a big future for resource juniors. They're going to become the superstars looking for deposits in secure jurisdictions such as the United States and Canada, provided these nations get the NIMBY and First Nations blockades under control so that permitting can actually happen on a reasonable timeline and the money raised to do the exploration. And at the same time, I think the market does not believe that we are on the threshold of a secular gold bull market. I mean, gold's at 2,700, and the traditional explanations for gold being up, they really don't apply. What we're dealing with is a fragmentation of the global economy. China emerging, it has its own payment system to compete with the SWIFT system. Things could get very, very turbulent in the next few years. And if this happens, the global demand for gold will continue to get up. And with everybody seeing the wisdom of continuing to hold gold rather than sell it, that's going to result in a higher real gold price. So we are now seeing, since gold adjusted from its controlled substance $35 price to whatever $400 in 1980, we are now seeing a significant new real price increase for gold for the first time in the last 30 years. And the market doesn't recognize this because you need to do a bunch of arithmetic to actually see that. But I think by 2025, the inflection will have happened and people will say, oh, we want resource juniors. We want gold exposure. Gold itself, it's not going to go up by huge percentages, but it's simply this adjustment into, say, the $3,000 to $4,000 range without any resurgent inflation. That is a big deal for resource juniors because it reduces the cutoff grade for what counts as a potentially economic deposit. So I see finally this long bear market wait coming to an end next year, and so I am going to keep the $450 per year membership alive until March 31st of 2025. This means anybody who subscribes today until March 31st for $450, they will have full access to everything, including the Bottom Fish Workshop, until the end of 2025. And if I continue the Bottom Fish Workshop, even though I have now a $200 a month for sort of high-end corporate and high net worth investors, they will be grandfathered to continue at the 450 range. So right now, I'm rolling up my sleeves. I'm going through the list of bottom fish that were on this year's list, finding out which ones deserve to be continued into 2025. But I'm also looking for new ones that may have descended from high levels and be sitting at a bottom. I think the last 2 months of this year could be very turbulent for markets. I think the stage is set for a substantial equity market sell-off. Some think it's actually going to go up, but I think the odds are that it will go down. That will not be helpful for the resource juniors, but now is the time to find out which ones would rise from the bottom if we do get a resource junior bull market, and you might be able to even catch them at stupid prices. You have a stink bid in there, and all of a sudden somebody in a panic liquidates an account. And keep in mind that the general view is still the Canadian resource junior system, that ecosystem, it's terminally ill. It's dying. It does not have support from any of the financial establishment. It has no audience. So a lot of people who are sitting with these stocks in their portfolio, if we get a general market meltdown, they're just going to wail this, hit the bid, out of sight, out of mind, done with this sector. So I think the next 2 months are going to be, and I've said this before and looked stupid, but it's going to be a classic bottom fishing window for the resource juniors.
Why have you confirmed Adamera Minerals as a bottom fish for 2025?
Well, Adamera Minerals has been an on and off bottom fish pick since 2011, when the company combined its diamond and uranium exploration vehicles and pivoted to a focus on northeastern Washington. And what they were looking at is this old district of high-grade epithermal veins and also gold skarn deposits. It's not comparable to, say, what was going on in Nevada, but it still has had, over 10 million ounces mined from generally high-grade deposits. And this is the Republic Graben district. So they started picking up claims in 2013 when they finally got this all going. And this was just in time for the bear market that started in 2011 to really get serious. That's when gold finally melted down from its higher levels and descended back down to that sort of $1,100, $1,200 an ounce level. So Mark Alibaba has basically had the gale of a bear market in his face during this period. And he's taken on a number of various prospects there. He's done these small drill programs. Sometimes he gets something interesting. Most of the time, though, the results have been mixed. But he's been in this area fighting with the struggling with the U.S. Forest Service to get permits, suffering through the delays, but getting to know everybody there, who's what, establishing the relationships with the communities. And in 2021, they saw that Kinross had dropped all the land that it had staked around its old Buckhorn mine. And this was a 1.3 million ounce deposit that the predecessors tried to develop it as an open pit mine. Washington would have none of it, but eventually Kinross took it over and developed it as a very lucrative underground high-grade mine. It's now shut and reclaimed, and they still own the original lease. But they had tried to do a big plan of operations on the surrounding land. Like, it was an enormous one, and the Forest Service kind of just stonewalled them, and they gave up, dropped the claims, and Adamera came in there in 2021 and staked all this land that Kinross had dropped, and they called it Buckhorn 2.0. It attracted Chris Harold and Mark Jones, who were part of Crown Resources back in the late 80s, early 90s, when this deposit, the Crown Jewel, what Buckhorn used to be called, was discovered. So they ended up becoming backers of Adamera. And Adamera has, since 2021, done several drill programs, but has been hampered by the slow permitting process with the U.S. Forest Service. They've had largely a geophysics approach, generating these targets, doing some surface work to try and upgrade them, and they've attempted these sniper kill shots and have not really had any luck. And this market is extremely unforgiving. It expects a sniper kill shot, and they don't give you a huge amount of money, so they have basically punished the company each time they fail to deliver a discovery hole. And so this year, the company basically ended up capitulating. It was stuck down there at 4 cents or whatever, and it did a 10-for-1 rollback, which was very frustrating for us bottom fish workshoppers. My position got this 90% haircut. It's now a fraction of what it was before. The company has since then done a financing. It's raised half $500,000 at 15 cents, but this is useless because the Buckhorn 2.0 project, it requires a $1 million US plus program. You need to go in there and hammer multiple targets, and this market right now is not in the mood for doing that. Now, the potential for finding a Buckhorn clone, it's very good because all the work in the past, the Buckhorn was discovered almost by accident, and then everybody was focused on that. So the surrounding area has not really been explored for repetition of this type of skarn deposit. So the Buckhorn 2.0 in the current market climate, it's there as a potential play, but it's not what interests the market. So in September, Mark Kalibaba went and managed to get a lease on something called Flag Hill South, and this is just to the west of Republic itself, and it's south of the Flag Hill project that they had acquired way back in 2013, and I think they attempted to drill something, but they didn't really have the money to do a lot more. But these are all high grade veins, and between Nob Hill and the Golden Promise, 2.8 million ounces of high grade, better than half ounce per ton, have been extracted from those deposits. There were a couple shafts all connected underground, and Hecla shut everything down back in 1989 because it was all largely depleted. But what Mark's view has been is like, okay, all this was all based on old school exploration. How about brand new, fresh perspective? And that's what he came in there with 2013. Now, this Flag Hill South property, it's actually on private land, but there was a problem because somehow the mineral rights got separated through inheritance stuff, and the current owner couldn't really confirm that he had these mineral rights along with the surface rights. But Mark ended up helping him sort this all out. And, no good deed goes unpunished, because then Kinross waltzed in and did some sort of deal. We say, okay, give us a right of first refusal, and we'll do some sampling on this property. So it ended up being tied up for a couple of years, and then it lapsed. And this year, Mark went in there and said, okay, how about do a deal with us, and we'll do some work. And Kinross tried to get back in there, but this time the owner said, no, we're going to deal with the junior because you guys never did drill anything. So this junior is desperate. It's going to drill these veins that are there, the C3 vein. And so they did the deal. It's cheap. It's a 2-year deal. Pay $5,000 a month, but then you have to pay $1 million or $2 million at the end of 2 years to own it. So you either have something there or you don't, and he's going to give it a shot. And they have now started drilling. It'll be a small program, but they know where the vein structure is. These veins have never been drilled. They've just been sort of had some holes dug into them by past operators. So this is what's happening here now. Now, this is small, and it's kind of like it's a cross structure with the main structure, the Republic structure that has the Nob Hill and the Golden Promise area. So it remains to be seen what they find. But if they find a high-grade vein, it doesn't have to be a huge multi-million ounce deposit, because Kinross has the old Kettle River mill still there that had to shut down after they ran out of ore at Buckhorn, at the Buckhorn mine. So it's possible that if they find something there, Kinross might buy it and turn it into mill feed to get its Kettle River mill going again. And this would be a non-dilutive financing. But that's not really why I've reinstated Adamera as a bottom fish. Buckhorn 2.0 is still the big play that I think will drive Adamera off the bottom and perhaps into a home run score for bottom fishers. But what I see is happening is, while they're drilling this, assuming they're not super unlucky and there's nothing there in the veins, they will be able to get some sort of mileage out of this program because it's patented ground. They don't have to do a drill permit from the U.S. Forest Service. They can drill this. If they start showing that this vein that's never been drilled actually does have gold in it, that will get the market interest. And there's only 35 million shares fully diluted post rollback. So this big overhang of warrants that they had, those are now in the stratosphere. They're not going to bother anybody for a long time. And because the structure is relatively tight, if the stock starts going up, these bandit Canadian banks, one of whom just got fined $3 billion for turning a blind eye to money laundering activities, they're not going to be able to engage in their capital stripping, where they incoming buying, they go and short into it and keep selling into the bid and then cover the short by the end of the day and snuff out the uptrend. That's not going to happen with a stock like this, because if it starts to run, it will chew through whatever they have to sell, and then that'll be bad news for these banks. But what I see as happening, if in the meantime we see the inflection happen and the market suddenly start to accept that we have a bull market for gold and the money starts coming in, the money is going to be looking for plays that deserve a lot of money and that are ready to be drilled. So a kind of bottom fish that I'm looking for is ones that have, the permitting pretty much done, but need a bunch of money, which the market won't give in this bear market that we have. But suddenly when the inflection happens, the money's there, they're ready to go. And in this case, because Adamera has been in this Republic region of northeastern Washington, they also know where everything is. They could actually expand their land and stake additional ground to beef up some of these old areas where there may be hidden potential. And if they get lucky at Flag Hill South, the market will say, oh, okay, there is potential in this area. It isn't just this dead mined out district. So you have this two-pronged. They're actually drilling Plan B now, hoping it allows them to finance their Plan A project. And this is the kind of story that's out there that I'm looking for now as I build my 2025 bottom fishing list.
What will allow Endurance Gold to emerge from the bottom?
Well, Endurance Gold has been a bottom fish focus for me since late 2019, when Robert Boyd managed to auction the Reliance project, which is in southwestern British Columbia, not that far from the 4 million ounce high-grade former Braylorn mine. And they have been drilling this system, the Royal Treasure Shear Corridor, for the last 4 or 5 years. And the market, they've got really good results. They get 70% hits for gold mineralization with each hole, which is extremely high. But the widths and the grades, they vary. And the market has been sort of lukewarm about the whole play. This year they were actually funded by the biggest shareholder, Richard Gilliam, who put in $4 million at 20 cents, a premium to the market. I don't think the stock has even traded that high this year, but they have a 6,000 meter drill program underway this year. Now, last year they were supposed to be the big year, but they got only a fraction of their work done due to forest fires in that area. So the season was curtailed. This year there have been no forest fires. They've done about 6,100 meters, 22 holes, And this past week, they reported assays for 4 holes. Now, the earlier holes in this year, they were focused on the Reliance target, which was the original zone that Charlie Boitard intersected a couple of decades ago and got a big hole that took the stock, I think it was called Manica Mining, took it to $5 almost overnight. And then they drilled more holes, and they were sort of fizzled, didn't have anything, and they never really understood the system. Robert Boyd's team has gone in there and said, this is an epizonal orogenic gold system, quite high up in the level based on the antimony that's present in and arsenic that's present in the system. And these things will persist 1,000 meters. I mean, if we get deep enough, we could find Braylorn-style veins at depth. But so they've been very carefully constructing an understanding of what's going on. Now, this news was important for 2 reasons. One, which is actually kind of like a dud reason. They had announced we put a second rig onto the project. Now, normally when people go, second rig, that means it's great. Yeah, they've got the hot zone and they now need 2 drills to beaver away at it. But no, that's not what the second rig is doing. The second rig is drilling shallow core holes in the area of the Eagle Zone where everything is very oxidized and where they only have RC holes. And the reason they did RC earlier is they knew they would get horrible core recovery, and so they did RC and they got grades. Now they're going in there with special technology which gives core recovery. And the press release said, the 6 holes we've drilled in that area, we have good core recovery. The technology is working. So you ask, okay, some of these are twinning RC holes, some are infilling. Why are they bothering with this? Why aren't they using the second rig to chase the system deeper where the market wants to see, does it blossom and get richer and fatter at depth, that type thing? Why are they doing this? Well, after 4 or 5 years of drilling, they feel they would like to put out a resource estimate, a 43-101 resource estimate. And they wanted to have better confidence about the RC grades, plus fill in some of the gaps. And internally, they are following the results, modeling it, gradually understanding the various mineral domains that are there, how to tie the zones together, how to come up with a proper resource estimate. And they would like to, by the end of the first quarter of next year, put out a resource estimate. Will they do so? Well, internally, they would like to see a 1 million ounce threshold because that sort of seems to be what the market wants to hear. But that's only the case when you've delineated the system, when you've found its limits, and you say, okay, here's what we got. Now we go into economic studies. You're going to do a PEA, figure out what it's cost to mine this and what the NPV will be. This project is not like that. So I'm hopeful that they don't count on this 1 million ounce threshold. It'll be fine if they can get an open pittable resource for that, where they've now got 760 meters of structure, holes into it, mineralization everywhere. It would be nice if we see the 1 million ounce, but even if they come up with only 500,000 ounce, I think this would be valuable because if we do go into a gold bull market inflection, institutional audiences will come back. And they don't particularly like to invest in exploration plays. They like to point at some ounces in the ground as, okay, this is a beginning, this is a starter. This explains why we own this junior. So I hope they do put out that resource. And when they publish the technical report, it will also reveal all the geometry of the system and alleviate this concern that, they get high grade here and there and all that, but how does it hang altogether? So I think if they do this, they will get a big boost. Now, that's sort of what the trivial part of the news release, which actually has meaningful significance if you're thinking big picture. But what was really interesting was the holes that they reported, 2 holes for the Crown Gap. And they had decent grades for that, 15 and 19 grams per ton over short intervals, 0.7, 1.5 type intervals. But they also had a hole, the deep two holes. The deepest hole, this one was 185 meters step out down the dip of the dip of the plane of the Eagle Zone, and that got 5 grams over 5 meters or something like that. And this hole is significant because the theory here is that as you go deeper, this system persists. So, and another one in there, it was down about 125 meters. It also intersected mineralization. So they know that the Eagle Zone, whereas, when they stepped to the southeast up the hill, they drilled a bunch of blank holes, and it looks like it's cut off, though that may be due to some sort of fault offset. They need to sort that out. But they know now that chasing the Eagle Zone down plunge, this is going to work out. But the Crown Gap, this was a sort of 400 or 500 meter gap between Reliance and Eagle, where it was never drilled because at surface the geochem is very mediocre, I guess, compared to near Reliance and in the Eagle. But these holes have intersected, confirmed that the zone is present, and they reported several additional holes, and two of them they have tagged as VG, visible gold. And I asked Robert Boyd, what does that mean? Did any of these other holes have VG in it? Why are you highlighting these? And he said, no, not counting the Reliance holes, we did not see VG in any of these other holes, including these high-grade ones that we just reported. Now, normally they can see, if you look hard enough with your handlets, maybe a speck here or there. But generally, the gold's hidden in the sulfide, so you have to wait for the assays to see anything. So I asked him, well, did you find specks? Is this what you're talking about? And he said, no, this is actually serious visible gold. It's what one of our geologists says. One is called 3-foot gold, and the other one was a 10-foot gold. And what he meant by this, jokingly, was that you can see that gold visible with the naked eye from 3 feet and from 10 feet. So this is something potentially very promising about the Crown Gap. They've got more holes planned for it, and when we get the assays for these VG holes, that could be very, very interesting. And he also said that they are planning one hole. They're going to drill till the end of November. They're going to plan one hole that will be from surface to down the dip of the structure. It has about a 75-degree southwest dip, a 650-meter hole aimed to it. That will be the deepest the system has ever been intersected. Now, that's a high-risk hole because maybe it does peter out or maybe it's fault offset. But if that hits, that would really set the stage for follow-up drilling next year. And as winter creeps into the area, they're going to move down the hill to the northwest toward the lake, where no drilling has ever done. This is to the northwest of the Reliance Zone. That's where they're going to put some holes in to see if they can repeat the Crown Gap experience, where there was nothing interesting at surface, yet the structure continues, it's mineralized at depth, and they have the system. So that would probably extend the 760 meters of mineralized corridor that they have now to maybe 1,000 meters of mineralized corridor. So I asked Robert, okay, well, we don't know what the results of all this will be. We'll get them in a couple batches, probably one batch in mid-November, another batch in early December, and maybe the last one's early January. Now, I'll give you two scenarios, Robert. One is, suppose we have a horrible bear market like this year where your stock is going to flatline because people don't believe in gold, and it's going to be more of the same. So what would you do in that scenario? And the answer was simple, yes. We have $6 million plus in the treasury. We don't need to finance. We can continue to do a scale program similar. We'll have a much better understanding of where to put the next holes. We have the roads in place. We'll be able to grow this at depth. And if we do have a resource estimate, the audience will be quite pleased with that. And then I ask them, well, what if we get that inflection and the market starts to believe we're in a gold bull market, and suddenly money is being shoved in your face? They want to give you like $5-10 million to do more work at a much better price than this current 15 cent price. What would you do? And well, the answer is very simple. They could get a 30,000 meter plus drill program going with multiple rigs to chase this to infill where they already have the deeper holes, but even chase it deeper because, deeper holes, more expensive, take more time. And they are permitting the Olympic project that's adjacent. That has, they have to still do all the First Nations consultations, but they've been working on it for a while. They've developed surface targets that are drill ready. which could repeat what's going on at the Royal Treasure Shear Corridor. So they will be able, for the first time ever in this area, be able to put holes in there and maybe duplicate what's going on at the Royal Treasure Shear. But that's not all what they could do. They also still have the Elephant Mountain project in Alaska. This is an intrusion-related gold system. They've pecked away at it with, small drill programs. They've got, half-decent gold mineralization. It's not off the scale, but they haven't really sorted out how this system works. And Robert says this needs a $2 million program, and that's really all we can do right now because we have a permit in place for helicopter-supported drilling. If we would need to do a permitting cycle if we wanted to put in roads for a much more extensive. So the maximum we could conceivably spend is $2 million. So that's a good reason not to farm this out because intrusion-related gold systems in the Tombstone Belt that stretches between Yukon and Alaska, that's turning red hot. We saw Sitka Gold deliver much better grades than they had in the past and in the last few weeks. We, of course, have the Snowline story. The market's finally taking Free Gold Ventures Summit project seriously. And when you have a higher real gold price, these, sheeted vein systems, you decrease the cutoff grade, you build the ounces, they become these block caveable underground or open pitable system, you can see a lot of ounces grow. So if a whole bunch of money comes in the door, they could also mobilize a drill program at Elephant Mountain in Alaska and perhaps show that this thing is also a intrusion-related gold system that needs to be taken seriously. So I think either scenario, we continue with this bear market or we get this inflection. Endurance Gold is one of the better bottom fish out there. And I would say right now, if somebody were to start bottom fishing, this should be their priority to pick up stock while we're still in this negative funk about the resource junior sector dying out.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.